Right, today is the 3rd of July 2025, Crazy Revision with Kel, review of the 2nd July's market. All right, guys, all this revision, we are doing this just in preparation for you guys and moving forward itself, right? In the coming future, we will do it more like a video shorts. So it won't be live. The only time the live session will be just only concentrate on the macro market, and then after that, you guys can move on. Yeah, the so-called revision will promptly send out the videos to our this YouTube channel there, and you can watch over there itself. Yep. Okay. All right. So that'll be more productive. Okay. Let's go into the market, shall we? On. Okay, so let's just look at what is happening in the market right now. This is the Dow Jones as of yesterday. So let's just review and what happened. Now, the Dow Jones opening price is 44,504. The MLT was 44,278. So the opening price was below pivot 2. So without a doubt, it is a below OP, below pivot 2 sell signal. Yeah. But initially, it went up first, got itself resisted at the pivot 2, then it pulled back down to sell. And then it was strongly supported by the MLP. But what was critical is that usually with KSI rate, right, the market will come down and stay down. But because the retailers are buying strongly, and that's where it pushed the market up again. And of course, we all know that there's a lot of funds ongoing right now from the US Federal Reserve. Although they didn't say where the funds go, but very, very clear that you can see only only a government funds can do a incredible step up effect here itself. So while this is happening, right, my KSI is really going mad on it. So as the price is going up, right, this is actually a very strong potential elephant downside trade setup, which means that if the market really want to move based on the KSI, the market can really come down all the way. Now, if the market come down all the way to here, I cannot imagine what will happen. That means that the market must drop by how many points? Wow, 2,600 points. Wow, that is crazy. Yeah. So I don't know. I don't think it will happen, but let's see. Okay, let's look at the Dow Jones on the 5-minute chart on the bigger scale first. Yeah, so the Dow Jones was sideways for the first part of the day as usual. Then the second part of the day, that's where the Dow Diamond prop in and then the market goes up. Now, what was scary is that the pivot 2 was all the way from the starting point already have this pivot 2, right? And the market actually crazily stopped at pivot 2. This is the first thing that we saw. And then after that, we have the diamond again. We draw the line. And once the market breaks above the line, the market went up. But again, the same thing happened. The price pulled back. But when price pulled back, you notice that it stopped exactly at the pivot 2 level. So whether it's coincidence, I'm not too sure, but we don't buy into here. So who is the one who have been pushing the market on its own once it hit the KTR or pivot, right? That is something new here. Then after that, the market couldn't go down. Obviously, it will go up instead. All right, so it went up all the way, but it misses the KTR +1. It misses by +1 by a bit. And then after that, the market reversed, and then that was where you can see that the trades are there already. Okay, so my rising concern right now is that you, okay, know that there is a line here that's supposed to extend until the new diamond appear. Okay, if you miss out, this is fine, but you notice that there's something interesting over the, oops, whereby the market, right, tries to stay above it. Then when you break it up again, you can see that the market doesn't like it anymore. And the thing is this, the boys start to sell, the KCX also start to sell. So once the market break, that's it. That was where the market really go down because it's below pivot 2, right? And then after that it goes down further, and that was where the OP gets into the mark. And once the market breaks below OP and below pivot 2, without a doubt, you can see the market going down so near to the KTR -1. But of course, we all know that it missed by a little bit. Yeah, I should just, you know, done it and waited on this one here. So well, the market rebound after that, all the way to the high and stay around the OP. And this is how we have seen for the Dow Jones. Yeah. Okay. So all clear. If all clear, press number 4 right now. Okay, these are the bigger picture of how the thing will work. All right. So just show you how do we draw. First, there's a blue diamond here. You draw at the line, and then a new blue diamond here, you draw at the closing line. So you can see the line actually going down. So that is the first thing that to take note. Second thing is that after that, when the market do a reversal, break OP and come down, right? So you can see that the market basically go and slap all the stop loss in the market first. Then after that, the market started to really sell, and then we can see the market doing this. Okay. So all I can say is that, guys, if you follow the rule, that will be good. But yesterday, the KTR -1 didn't happen. It missed the thing by a fraction. But remember, I told you before, right? Don't do this, right? You see the Dow Jones KTR -1 is 44,337. I see always give advantage to the market. So the advantage I always give is probably 50 points, which will be 4427. Okay, somewhere down there. Okay, sorry, this is wrong. 443. Wait a minute. So it's this Dow Jones 30.367. Yeah. Okay. So you done 367, you'll be given the profit. So Dow Jones normally we give a plus 30 points itself. Yeah. For gold, we try to shift we try to truncate or round down. Yeah. Round up. Sorry. Okay, so this is gold price of yesterday's market. Let's take a look. And the thing was very simple. The gold opened at 33.39 and MLP was 33.20. The KSI was green. Everything was good. So above OP, just buy. But again, let me ask Kel. The market opens below pivot 2, right? And by right, based on what you saw on Dow Jones, below OP, below pivot 2 is a sell. Then what you call for buy. So same thing, guys. Initially, I call for sell. I expect the price to go down, but the market again missed on MLP, right? Something similar to the Dow Jones, right? But the thing is that after the market breaks with the MLP, but for the gold, it didn't. And then when the gold reversed above 3391, I know that the buying came back in. The pivot was basically, conclusive. And then after that, the market just go all the way up, going for the 3367 KCB level. Okay, so that was what happened on the day chart. Let's look at the 5-minute. Okay, the 5-minute have been very choppy at the start of the day. Then it goes down, and we have the diamond, and we have it going down all the way. And same thing again, if you do the division 2, you will say the midpoint somewhere around here. Okay, so that is the first thing to think of. And then after that, you can also notice that there's something interesting here. Okay, so the thing is this, we can see that the gold price start to bottom out over here, and if you notice, what you should put a line across it, and then after that, if you want to do any form of trading on your own, it's fine, but you can see that the price is going up. Now this is very interesting. So same thing, when the diamond comes out again, you draw the same thing on the line, but if market goes below it, don't care, don't bother, it's time to get out. Okay, so that's why drawing the line is very important. You not only draw the line for the upside, you draw the line for the downside. So that is how the thing happened. Now double diamond is always a very powerful signal, whereby it's like basically the confirmation of the two main criteria. Of course, if you can stack together, it'll be better, but just nearby within 5 days is fantastic. So what you're gonna do is that you can take a look over here. You just have to draw a simple line and then draw, here or here. All right. So you can see that straight away the market you're gonna buy here because everything is with you. You're gonna try your luck. So no problem, but just be careful. And then after that, you can see that this thing happened and the market goes sideways. Right? And the thing is, we all know that after that, once the market stabilized itself, the gold price went back up and gave us the green dots. And the green dot, was it for? It's either for a big movement upwards or downwards, right? So you can see what happened to gold. It went all the way up instead now because near the top of the market. Okay, so once again, all these things shows evidently, yeah. So why would there this arrow? Because the market has broke below the opening price. And the next thing is that we all know that when the boys are buying and buying and buying strongly, try our best not to miss it out. Okay, very important. Okay. So let's show you the expanded view of what you can do. So same thing again, this is your arrow. Okay. All right. Okay, so that is how you can see the where you put a line and then where the diamonds is. Okay. All right, all clear? Okay, so that will be all for today. Thank you very much for listening in. All right, so we remember this next week onwards, right? We will remove away this version. We just do short videos and upload to you guys. That will be much faster. Okay, thank you very much. Take care. Thank you. Bye bye.